Welcome back to our podcast, At Home on the Lakeshore, where we talk about home loans with our local home loan experts at UnitedOne Credit Union. And my name is Mike, and this is episode number 18. I'd like to welcome back in our experts, Carrie and Julie. Welcome back to the show.
Hello.
Howdy. Good morning.
We like this time of year. Things are starting to get warmer slowly, very, very slowly. Spring in Wisconsin but then all of a sudden, then it'll hit, right? We'll have that week or that weekend where things will finally start to turn and get a little bit warmer. And you know what? I think I'm definitely ready for it. How about both of you?
I am too. I am ready for some sun. I feel like everything is gloomy and rainy, and we need sun.
Gardening is my therapy. I love to dig in the dirt. So I am just chomping at the bit to get in the garden and start digging in the dirt.
Yes, I agree. I'll have to be digging in the dirt. Less fun for me because I have a retaining wall that's no longer retaining. It's now it's a bit of a crumble. So I'll be out there as soon as that weather begins to turn as well to re-shore it up a little bit. I got a few stones that have taken a tumble down, and I don't know if some wildlife ran through there. There were some deer tracks when we had snow, so I got a feeling that one of them decided to dance along the wall there. And anywho,
Wow.
I'll be having
Are
to
you used
put that
to
back
being
together.
masonry work so you can learn all your skills?
I've been doing some research.
Okay.
So see what I can learn about that kind of stuff. So we'll see, right? If not, well, I might have to call in the professionals, but I'm going to see what I can do a little DIY. See if
Yeah,
I
hey,
can handle
we
it.
know a few guys that might be able to help you out.
I'm sure.
And you know
All
what,
right.
Mike? If you need extra money, you know where to come.
That's right. When you have those projects, because we know this happens this time of year, folks go out and they take stock, right, of the condition of the home after a long winter like this, and you begin to see what's happening in the yard or in the lawn or around the house, and what's happening, that there may be opportunities there, or shall we say, projects that come along that might be more than just a little bit of pocket change, and you might need to finance that. And we would have some, I think, an option here for members and listeners to check out. But before we start talking about those opportunities for those dollars, let's get to Julie's joke of the show. We don't want to forget about that. We'd have people writing in letters and banging on our doors, probably pitchforks and torches if we didn't do the joke of the show.
I know people wait for this.
Mm-hmm.
Are you ready?
I'm sorry to say,
Never
I think
ready.
I am.
What? You're never ready. All right, here goes. What has two legs and can't walk?
I know, you got me stumped.
Give up?
I do.
A pair of pants.
Oh,
Ah,
good one, Julie. Good one. Like that. So obvious. I should
cue
have
the
known.
symbol.
Right?
I think we need the gong show gong.
Hey, I think we say that every month.
Just kidding.
Yeah.
I think I did say that last month.
I know they're not getting any better.
That's okay. We love a good dad joke, and you tell them so well, Julie.
There are some other ones I could put out there, but I'm not sure they were maybe approvable. So I'll stick to my dad joke.
We have to keep this. PG at the very least, right?
Exactly.
So you never know. It could be some young homeowners out there, future homeowners that would be, try to
Kids
keep
in the
it
car
clean.
with mom and dad listening to the podcast.
There you go.
Exactly.
This is a family show,
You
right?
bet.
We're talking about home, and home is where the heart is, and also where the family is. So, hey, we did touch lightly on the topic so far today of going around our house now that it's springtime and that weather's warming up, and maybe you yourself have a retaining wall that needs a little, shall we say, attention, or some other project around the house, or perhaps it's something that doesn't have to do with your property or home at all, but could be something that you need to finance to pay for or something like that this spring. So as we look ahead, we want to cover the topic of home equity loans. And, as you go around and, hope springs anew in the springtime and the world opens up and a lot more opportunities to be out and about, and a home equity loan could be the perfect way to help you finance and pay for whatever your dreams are this spring and this summer. So, ladies, let's start with the big question when it comes to home equities. What can you use a home equity loan for? And are there any restrictions on how someone can use the money when they get a home equity loan?
That is a great question, a very common question that we get. And really, home equity loans, you're using the equity from your house, so you can use it for whatever you wish. If it is for the home, updating, small projects, big projects, roof, siding, whatever, any project for the house, or big vacations, weddings, debt consolidation, student loans.
Buying a car.
Yeah, there you go. That's another good one, especially in costs of cars. Sometimes it's easier to pull out the equity from your house and maybe take it out a bit longer to keep that payment lower. So yeah, the sky's the limit with home equity loans.
You can even use it on a crumbling retaining wall.
Sure. We can rebuild that wall.
And if you can't do it yourself, you can pay someone to do it for you.
Excellent. So you can really use the money for whatever you want. That's, even if it doesn't have to do with the home, the property, or anything having to do inside the home or those kind of things. So Julie, you had mentioned even using it for a vacation. What are some other things that members at the credit union have used home equity loans for that might be unique or different ways that people can think about utilizing that equity in those funds?
Yeah, some people have taken out, like using the equity for a down payment, maybe on a cottage up north or investment properties. Maybe they're starting to dabble along with, buying a couple of investment properties. They can use their house for that down payment to get into the next house. So those are more unique situations. But if the equity is there, especially in this market, the values have been higher. People have been paying down on those mortgages, so the balances are lower. There is that gap, and that gap is the equity. So we can go ahead and tap into that and help wherever it's necessary. If you want to invest, I've even had people that have had their house paid off in full, came back to us, used the equity, took that money, and actually invested it in the stock market. So they were big, stock watchers and realized some of their interest or some of their lines or their trade items were going lower in cost. So they turned around and reinvested it in the stock market. And that was, it's kind of your choice. What do you want to do with those funds?
Sky's the limit. I've known some folks use it to help pay for a child's wedding or taking it out to help cover college and educational costs. We know those continue to rise. And so if you're helping out your kids, grandkids, or other members of your family to help cover some of those costs, that home equity loans can come into play there as well to help give them a boost with that educational costs around college and universities and things like that. I've known that to happen in weddings as well for those couples getting married, a way for them to finance those or to give a nice wedding gift, so to speak, so that they could use those funds to help build and grow their families. So what are some other ways you guys have known folks to use those dollars?
I've seen boats, pontoon boats,
Mm.
The toys for the up
RVs.
north property.
Right, right. RVs can be rather expensive, so I have done that as well. They were buying a new RV that they were going to go cross country traveling in the summer months or winter months probably, and yeah, so we financed that. I asked them if they would take me along with them on vacation, but so far I haven't gotten that call.
They have to write that into the next one, Julie, and see if it's like,
Put a contingency in there.
yeah,
Take
under the
Julie with.
condition. Oh, well,
Dream
we do have
trip
one of
to
the,
Ireland or, all
yeah,
kinds of fun
Right,
things.
right.
we have a question here from one of our silent guests. Special guest joining us off air, but is listening live, and that is a question of what other benefits come from doing a home equity versus looking at the other lending options that are out there, like a consumer loan or perhaps using a credit card. What would be the advantages of home equity loans over those other options?
You generally have a lower interest rate when you use your home as collateral than if you do like an unsecured loan, even sometimes a secured loan. And then you can also potentially talk to your tax person, have a tax deduction on the interest you pay on that mortgage loan versus a consumer loan.
Yeah, and sometimes on consumer loans, there's a shorter term. So, maybe it's only for a 2-year, a 3-year, 5-year. On mortgages and home equity, we can stretch things out for 20, 25, 30 years. So, depending on the size of your purchase or the size of your remodel job, or maybe the debt consolidation, we can sometimes stretch those out, even taking it for 10 years. So you're not taking debt back out to 30 years, but even a 10-year can lower that payment to give you a little bit more spending each month so you don't put yourself back into credit card debt. So it's along, like Carrie said, a better interest rate. The
Mhm.
term can be stretched out a little bit longer to keep those payments down.
Yes,
I know.
because it's in the name, right? Home equity loan. So you've already built up equity in that property, and you're basically using your house as the credit card then. You're using that property then as the collateral, so to speak. And that's why those rates are so much lower and much more controlled because it's more stable.
Correct.
Versus using plastic, where, I mean, what a credit card's average rate these days, even on the good side of things, is upper 20s, low 30%. They have to be paying that back versus a home equity loan, which would be a fraction of that comparatively.
You bring up a really good point because we've been doing more debt consolidating.
Hmm.
And one of the things to look at is, yes, you might have that first mortgage at 4% from a couple years ago or 3% from a couple years ago, and now you're looking to do that debt consolidation. And a lot of times people are saying, "No, I don't want to touch my first mortgage. It's too good of a rate." Well, what we need to really do though is look at what are we trying to do? If we're trying to do that debt consolidation and you're used to paying the 22, 23, 25% on a credit card, maybe refinancing that first mortgage plus the credit card debt might get you into a better payment and a shorter term because of the high interest rates on your credit cards. And that's the
Hmm.
goal, is to get those paid off. Maybe the right answer, and just instead of adding additional payment on a home equity, is to do a full refinance. Even though you might be losing that 4% rate, you're still gaining by paying off those credit cards, getting those out of the high interest rate. So it's not always, "Oh, I have a 4% interest rate." Sometimes that's not always the final answer, is leave that alone, don't touch that. It's what are we trying to accomplish? Can
Hmm.
we shorten up a term? Can we consolidate and give you one payment versus multiple payments? So sometimes it doesn't it's not all rate driven. We can look at a term or a payment could be the driving force as well.
Nice. Um, we do have another question here that we've got from a listener, which is great to start getting some of these. And just a quick plug. If you're a listener out there or you enjoy the podcast or some of the information, we'd love to get questions from you and feature them on the show. You're probably not alone if you have questions about these mortgages and home loan products. They can be confusing. They can be big things, but they are manageable. They are doable. People do this all the time, and you have experts on your side, just like Carrie and Julie here at UnitedOne, that can help you navigate these waters, answer those questions for you. So, sorry, I had to put that plug in there really quick, but you have
Perfect.
experts on your side, right? So to the question, are there any differences between a home equity and a second mortgage, or something like a lot of people have heard, HELOC or home equity line of credit? What would be some of those differences with those?
Home
Go ahead.
equity loans are, a second mortgage, home equity loan are kind of like different terms for the same thing. You can take out a home equity loan and it can be a second mortgage, a third mortgage, a fourth mortgage. You can split up and have different loans, or like Julie said, you can consolidate it all together. So they're just different terms for kind of the same thing. And a home equity line of credit is just that. Think of it as like a credit card using your house as collateral, but at a much better rate. You have this line of credit backed by your house as collateral that you can take out money when you need it and then pay it back, and it's available to you again. So it's just another way of using the money. Say if you have ongoing projects, this year you want to do a new deck. Next year you're going to remodel your bathroom. You have things in the future that are coming up. Sometimes it makes more sense. And we've done a whole show on home equity loans. So make sure you check our podcast on that too if you're interested. But it is a nice thing if you have different projects you don't want to have to keep refinancing for. Get a line of credit and you can use it as you need it. And you're only paying interest on the money as you draw it out.
Nice. Yes. As Carrie mentioned, we do have a podcast episode talking about HELOCs, and they are a bit different than your more traditional home equity loan, or second mortgage, or as Carrie mentioned, could be second or third or fourth on that. But the main thing to keep in mind is that there are options for you, and we will help you navigate those options, let you know what those rates are, what the expectations would be, how each of those products work uniquely to your situation, and then give you an honest feedback on what option might work best for you. And then it's up to you and your family to decide what makes the most sense and what will put you in a financial position of strength. And that's what it's really all about. That's the beauty of home ownership, is you're building that equity so you can use it for these kind of things. It builds that stability, that strength, and the future for your family, that basis. So home ownership really is the American dream, but it's also the backbone of most American families for growth there. So I will now step off of my soapbox and back to the show. So one more question here before we wrap up the show, and that is, are there any costs involved when it comes to a home equity loan? Like, we know when you're getting your mortgage for the first time, there's closing costs and there's other fees and other things that are needed for a loan like that. What are some of those additional costs or additional features or things that listeners would need to be aware of when it comes to getting a home equity loan?
Yeah, that's a very good question. Yes, there are closing costs because we still have to do some outside searching through a third source company. So like title work, that is one that we always have to go back and do usually it's just a letter report on a home equity loan, which in a letter report, they're just searching to make sure you're still the owners. They give us the correct legal description. They'll give us any other mortgages that are out against the property. So we need to know, are we in first position or are we in third position? So it's verifying. So that letter report still gets done. We make sure that you're not in a flood zone. And if you are in a flood zone, then we have to get have to advise you to get flood insurance. There is recording the mortgage with the Register of Deeds to say, yes, we have interest in this property, so that when somebody else comes and does a letter report, that they see our mortgage out there, that they know they're not in first position, we're in first position, or we have a second position. And then there's other miscellaneous fees, like when we pull a credit report, work number verification. So depending on what your employer does, if it's something we can just reach out to the employer to verify your employer, or do we have to go through a third source company to say yes, you're still employed? So unfortunately, all that comes with fees. Each company has their own fees for us to get that information. So there are closing costs. Sometimes in a home equity, though, you may not need an appraisal, or maybe you had an appraisal done last year. We can look to use that same appraisal. So that is one of the biggest costs is the appraisal. So if we can eliminate that, then the other closing costs may only be $400 or $500. If we have to do that appraisal or a different evaluation system, then that might add another $200, $300, $400 as well. So yes, unfortunately, there is closing costs in a home equity loan as well.
But usually those costs are offset by getting that better rate, having those more flexible terms, and being able to use the money for whatever you'd like as well. So
correct. And one thing in a home equity loan or a refinance of even your first mortgage, because you're now the owner, as long as there's equity, those closing costs can be rolled in. So on a purchase, when you're buying it out, you need that down payment and those closing costs to come out of pocket. But in a refinance or a home equity loan, then there's equity there. So then we leave that money in, there's availability. We leave that in the refinance saying, yep, the first thing we're going to pay off is these closing costs. Then you may not even have to come in with any funds on a home equity loan.
okay. Excellent. Well, thank you both for that's great stuff. We could talk about home equities and home loans and all that kind of stuff all the live long day. Wouldn't be the first time, and probably won't ever be the last.
For sure not.
But we do have to wrap up the show. Are there any final thoughts you'd like to share with our listeners before we do the wrap up?
We're here. We're here for options. Give us a call.
If you have questions and you're not sure, that's what we love to do, is just run scenarios past you and figure out what would work.
Excellent. All right. Well, thank you both for joining us again today. We look forward to having you back on the next show. And we want to thank all of our listeners for joining us and tuning in today. So if you have any questions about home loans or home equity, like I mentioned earlier in the show, whether that's anything having to do with home loan products, feel free to reach out to us. You can contact us at homeloans@unitedone.org. And we'd love to highlight one of your questions in a future podcast. And if you like what we're doing, we encourage you to give us a like and rate us wherever you get your podcasts, and feel free to share this podcast with others. New homeowners or people looking to get their home or people that have lived in a home for a long time. A lot of great information and knowledge here that we wish to share. And of course, you're welcome to follow us on social media. We're on Facebook, where we can be found at Facebook/UnitedOneCU. We're also on Instagram with @UnitedOneCU. And we look forward to having you join us next month. And until then, please take care and have fun with whatever spring projects you're going to be working on.